Hello and welcome to the Larvotto Resources Investor Webinar. Thank you for joining us today for this presentation, and I'm very sorry about the delay. We had a few technical issues getting started today. Before I pass you over to Larvotto Managing Director Ron Heeks and Chair Mark Tomlinson, a couple of housekeeping matters. Please note all attendees are in listen-only mode for this webinar. At the end of this webinar, we'll also hold a short Q&A session. If you would like to ask a question, you can enter it in the Q&A panel within Zoom. I will now hand over to Ron and Mark, who will run viewers through a presentation on today's news from the company.
Yeah, good morning, everyone. Hi, it's Mark Tomlinson. I'm the non-exec chair of Larvotto. We're here today to talk to you about what is a wonderful transformational acquisition that we've been able to make for the company of the Hillgrove Gold Antimony project near Armidale in New South Wales. The ability to buy nearly 1.4 million high-grade ounces of gold equivalent is for literally only $8 million is just an extraordinary opportunity and we believe incredibly value accretive for the company. Ron will now just give you a run through of the presentation. Thanks again for joining us today.
Thank you, and thanks, Mark, for the intro there. I'd just like to highlight again that we call this transformational, and it very much is. It's a heavily used word, but in this case, as Mark pointed out, to buy 1.4 million ounces at over 6 grams per tonne equivalent for about $6 an ounce, when we've got a current gold price of 3,120, is just exceptional. And this is a gold antimony project. Antimony is a critical metal. We all know how they're going, and we're at about 19,000 Aussie a tonne for antimony at the moment as well. So combined, we couldn't have timed this any better. If we can just move through the next couple of slides, which is the disclaimer in the presentation, please read those when you get an opportunity. The market capitalisation at the company was $10 million. If we think what the company should now be worth, given that it has 1.4 million ounces in it, we'll see where we end up at that. We're looking at purchasing the Hillgrove Gold Antimony project. This is an $8 million purchase, $3 million for the resources and assets, and $5 million replaces the government bonds. That's very typical. We have government bonds on every project that we already have. 1.4 million ounces. The 65% of this is measured and indicated. Overall, the resource is about 6.1 grams per tonne. The measured and indicated is actually closer to 7 grams per tonne. So 65% of the resource is right up there with some of the best grades in projects in Australia. Antimony, critical metal. This is the largest antimony deposit in Australia and the 8th largest in the world. So it is a world-class deposit in its own right. The measured and indicated is easily converted into reserves. We need to rebase the costs and move them in, but because 65% is in measured and indicated, we would be expecting a very good movement in the near term into our first reserves. The exploration upside of this project is huge. It's easily a multi-million ounce field. It already is. There's been 750,000 ounces mined from this field previously. There's 1.4 million sitting there, so it's already well over 2. We expect that to be able to increase from there significantly, and we'll have a look at that in the near term, where we think that's going to come from. There's been a lot of money spent on this project. It's got a plant on it. It's got 15 kilometres of underground development. It's got faces ready to go, and it's got an active processing plant that was running in a limited capacity last year, but that demonstrated that it works and works well. What we do need to talk about is how this opportunity came up. And Hillgrove hasn't had an opportunity in recent memory to run cleanly. It's had several owners that have got into difficulty through other projects and have struggled to bring this on because they've been struggling with their other projects. In this particular case, the operation was owned by Red River. They had a 2-year plan that I totally agree with to move the project back into operation. They'd started exploration, which produced some wonderful results. They had started on the mill and rebasing the mill and done a lot of development and tidy up. They had employed the mine team to take the mine into production, or the project into production, when they got into all sorts of difficulties because of a project they had in Queensland. They had a mine collapse at the Thalanga operation that caused them severe cash flow difficulties. At the end of the day, unfortunately, the company went into administration, and a byproduct of that was that Hillgrove fell into administration itself. So we're buying it from administrators, but the project itself strictly had nothing to do with the issues that put the company into administration. So we need to remember that. The fact that it has been in administration and the difficulty with doing this deal, we see as opportunity, and we have persevered with this for quite a while because we do see that it is such a perfect fit at a perfect time for the company. The acquisition includes a processing plant. It's currently on care and maintenance. It's fully operational. We've got to look at parallels here to Fosterville and Costerfield, particularly Costerfield, which is high-grade gold and antimony. Fosterville also has some antimony. Other higher grade operations around the place that are comparable. Certainly Bellevue may appear to be a long bow, but you need to go and have a look at where they started and where this is starting, and we're well ahead of where that went with similar sorts of grade. But given this, we still have an ongoing commitment to our Mount Isa and Eyre projects in Owakiri in New Zealand. We've just finished drill programs in Mount Isa and Eyre. Those results are literally coming in as we speak. There's been delays as per normal with results on both of those, but they've started dribbling in this week. So we'll be getting information out on those in the near term. We've also got some metallurgy on the rare earths at Eyre that has just come in the last couple of days, and that's quite interesting as well. We're doing this raise, 7.6 million at 7 cents, which is a 46% discount. We're also bringing in Trafigura for another 2.5 million as well. So very good support, Trafigura being one of the world's largest offtake partners, and we look forward to them joining the register in such a robust way. If we can move to the next slide, please. Our other projects, just quickly, Mount Isa, 900 square k's there. We've just finished the drill program. Those results will be out shortly. They're coming in as we speak. Ditto with Eyre. We've been waiting a little bit longer than we would have hoped for some of the results there. The rare earths metallurgy has just come in as well. And New Zealand finalised the drill program there earlier this year. I'd like to point out that we've actually spent more and done more on all of these projects, both metres of drilling and money spent, than what we'd put in our prospectus. If we can move to the next slide, thanks. Let's focus on Hillgrove for this presentation. 1.4 million ounces at 6.1. I'll keep saying it, but it is critical. This isn't 1 million ounces at 1 gram or 1.2 gram that's going to be mined at 8.8 of a gram or something like this. 6.1 grams puts you in a different league altogether. 65% of this is measured and indicated. It would be impossible for us in any way to generate 1.5 million ounces for $3 a tonne acquisition of the resource, taking out the bonds, $6 all up. We could never do that for that money to get such high grade ounces and move that into measured and indicated. So given that we're a gold explorer anyway, we see this as a unique opportunity to move up the curve, particularly at a time when, unfortunately, particularly copper exploration is becoming a little bit unloved, as you can see from some of our peers around the Mount Isa area. But having said that, we're not taking our focus away from that. The long-term benefits to this company is the upside exploration, particularly around Mount Isa. But this is just a unique opportunity to move into a different league altogether. It comes with a processing plant, extensive underground infrastructure. The project is essentially ready to mine. There's the best part of 2 years mineralisation sitting there ready to go as we speak. It's sitting on fully granted mining leases. 93 square kilometres, so it's a big area. It's in a wonderful part of the world, which saves incredible amount of costs. You're near a major regional centre. It has airports, hospitals, schools. It's a great place to live, so that makes attracting senior staff easier. It's just got so many benefits that you just can't put a dollar number on, but the location is one of the greatest assets of this project. It's been an active mining centre for 100 years, so it's nothing new to the area. Everybody's comfortable with what's been going on there. The processing route is really quite simplistic. We extract a high-grade gold, free gold, through a Nelson concentrator, then in a conventional float circuit to produce an antimony gold concentrate. One of the things that separates this project from where it was, say, 10 years ago, is that there wasn't a very strong market, if at all, market for gold concentrates or antimony concentrates. That's a different world now. There's a very active market in both gold and antimony concentrates. There's a brand new smelter that was only commissioned 18 months ago in Oman, and the gold concentrate trade is becoming very active. So it's given new life to projects that required a flotation and refractory circuit. And that, again, is a game changer for this project, and given that it's at all-time record high prices. We talked about how we managed to acquire this from Red River, and so we'll move on to the next slide if we can, please. Not much of this slide is the same now. The key personnel are still there. Lithium Royalty is one of our significant shareholders. They came in onto the Air project because of the lithium potential there at very early stage, and we'd like to thank them again for that. The share price has been sitting down around 12 cents in recent weeks. There's no doubt that some of that is that we haven't been able to get any information out, and we can only apologise for that. This transaction took considerably longer than what we thought and became considerably more involved than what we thought. It's easily the hardest thing I've ever done, but it was worth persevering with because we believe so much in this asset. If we move to the next slide, thanks. We're bringing in here Gauge Capital Management. They're $1 billion fund, investments all around the world. They want to be an active supporter of the company. They see this as a stepping stone to bigger things, and we look forward to them being an incredibly supportive shareholder. Trafigura, one of the world's largest commodity traders, to have them sitting on the register, we will certainly be talking to them about many things, but to have a fund like that, very supportive, particularly in New South Wales. They've come into Aurelia recently in a big way, so great company to have on the register, and we look forward to working with them moving forward. Next slide, thanks. Hillgrove itself, it's 23 kilometres east of Armidale, so it's a very quick drive out to site. 93 square K, granted mining tenements. You can't put a price on what that means these days because everything is permitted and ready to go. It has multiple underground mines. So I'm sitting on sealed roads. It uses mains power, which is primarily solar in this part of the world. There are some massive solar arrays around the mine, so we're not burning diesel to generate power. The project itself has generated 730,000 ounces of gold previously and 50,000 tonnes of antimony, which is a pretty good record. It's been on care and maintenance since Red River fell into administration. They did run the operation for a period, running low-grade stockpiles that were dated back to the 60s in some cases. They were trying to get a bit of a feed because they were so cash-strapped because of their other operation. They didn't make a lot of money out of that, and the grade was not good, and the tonnes were less than what they thought. But it did demonstrate that the plant did exactly what it was meant to do, given the modifications that they'd made to it. So it wasn't very successful for them, but again, another opportunity for us, and showed that the plant does what it's meant to do. The plant runs at about 250,000 tonnes per annum, and on current grades, which we would actually expect to be higher by the time we move through into reserves, it will do north of 40,000 ounces per annum. Recoveries in both gold and antimony very good, aided significantly by putting in that gold, high-grade gold, free gold extraction at the start, which a lot of that gold wasn't reporting through to the flotation circuit. So Red River had solved that problem. Next slide, please. Let's have a look at the reserves. This is a wonderful start for the company. Really can't overstate it enough. 1.4 million ounces. But if you have a look at the measured and indicated, that's the stuff that will be moving through to reserve in the near future. We've got nearly 4 million tonnes there at a grade that's going to be much closer to 7, north of 7 in actual fact. So putting you right up there with some of the best performers in Australia. So this is just a spectacular start, and done at $3 a resource ounce if you don't include those bonds. So it's hard to beat. Next slide, thanks. To push the exploration upside, some of the results that were generated in 2022 by Red River, they've found a new zone of mineralisation parallel and adjacent to a zone, high-grade zone that's already been mined. Intercepts such as 4.5 meters at an ounce, including 500 grams, 96 gram hits, 108 gram hits, and closer to the surface, higher antimony. So some wonderful hits in the new zone. Shows you the upgrade potential of the area. If some of those grades start flowing through, then you really are moving into a Fosterville type situation. So the upside here is really quite extreme, and the next slide will really demonstrate how that looks. No, it won't. Yep, missing a slide there, sorry. If we look at the infrastructure, there's the plant there. It's fully operational. It's in very good condition. It's near immediate start. We would be tweaking it. There is no intention to bring this plant on in the near term. The near term is certainly all about pushing the exploration, getting up to well over 2 million ounces, but also moving those resource ounces into reserve so that people can see that this is real. So the plant will be on care and maintenance for the foreseeable future, and we don't intend spending any sort of significant money on that in the short term. It's all about exploration at this point and proving up some of those higher grade zones exist. Next slide, thanks. The acquisition terms, as we said, 8 million, including the purchase price of 3 million and replacing government bonds. That works out at about less than $6 an ounce. That's about 10% of what's been paid for recent transactions around the place. Given the money that's been spent on the plant, it really is an attractive valuation by any metric, and I urge you to go out and have a look at some of the metrics of other operations. We would have loved to have shown you those, but unfortunately the rules dictate that we're not allowed to. But please go and have a look at the Fostervilles and the Costerfields and Bellevues, and have a look at the Bellevue reserves and tonnes and grade and where we sit in comparison and the history of that, and you'll see why we think this has got so much potential. Next slide, thanks. The deal, you've probably all been through it now, but we're issuing 70 million shares at 7 cents. This will raise 4.9, which is a discount to where we were. We wanted to do this. This was an absolute time-critical deal. I just can't push that enough. This operation ended up literally a day from going into liquidation, at which point it would never have been available in the future. The mining leases would have fallen over, and the freehold ground that's associated with it was effectively sold. So we're up against an incredible timeline to make this happen. We had to ensure that it happened. It was a big discount, but that was done because, again, we see the potential of this project is so great that it was worth the pain. We're doing a rights issue as well, so existing shareholders can participate, and I urge those shareholders to do that. Certainly the chairman and myself will be doing that. So we have an underwritten rights issue there. I've 1 for 2 to bring in the remainder of the funds. This is fully underwritten by Gage, and who, as I mentioned, want to be a very strong supporter of the company. What are we going to do with that 10 million? We're going to buy the project, obviously. The rest goes into exploration and working capital. We want to move this forward as aggressively as we can, while continuing, and I must stress, while continuing to maintain a high effort on our other projects. We are moving into the wet season in Mount Isa, so the exploration up there would have been slowing and is slowing at the moment, but we've got lots of results from this year's work to go out in the near term up there. Thank you. We've pretty well been through all this. We think it's a great deal. We have laboured long and hard to make this happen. I can only reiterate again that we see it as the perfect position for the company to put 1.5 million high-grade ounces into the company for the value that we've done. Really is exceptional. There's no way we could have done that with the drill bit. We've already spent a lot more of that than that on exploration. We've generated some wonderful targets that required follow-up, but we certainly haven't been able to get to reserve and resource statement type situations at a grade north of 6, which is just exceptional. So it really does stand out by itself, and I urge you to really get in and have a good look at this, and the closer you get to it, the better it looks, and that's been coming through to us over the last 4 or 5 months that we've been working on this. We just see more and more potential the more we understand it. That's about where we are. So if we've got any questions, Ben, happy to answer them.
Sure, thanks, Ron. I appreciate that presentation on the acquisition of Hillgrove for Larvotto. Some interesting points that you made there. Before we get started on the Q&A session, a quick reminder, if you would like to ask a question, you can do so on the Q&A panel within Zoom. We do have a few questions. So, Ron, we'll get started on those. The first question I do have is around Larvotto's broader portfolio. You did mention the exploration projects there. So once this acquisition is completed, what would that mean for the remaining exploration projects?
Certainly we'll still be supporting what's going on. As I say, we've got results coming in as we speak from all of those projects. We'll be assessing those and getting that information out as fast as we can. That will drive where we go. At Mount Isa, we've certainly got some really quite excellent geochemical targets that we need to follow up. We've just done a couple of 1,000 meters of drilling there, and we'll see what that tells us. We've got 900 square kilometers of ground up around there. It's a very, very active area. Copper at the moment, unfortunately, a little bit unloved, but that's more through world events and Russia selling direct to China and things like that that's keeping the price down. That'll wash out. But we really maintain the focus on that area. It's a huge bit of ground and a wonderful part of the world, so it will retain high status for us. It was a very, very early stage exploration program. There hadn't been a single hole drilled in the area when we went there. We've already generated some of the highest rare earth results in clays in Western Australia, and we're waiting on final results from our recent drill programs there. You know, it's a very early stage project. You know, we need to keep working that up. It's a big area, 600 square k's. There's a lot to do, and we need to do that in a frugal manner, given the cost of exploration at the moment, which is still really quite extreme.
Okay, thanks, Ron. Next question. This one came through relatively early, and you have touched on it to a degree, but why were the shares issued at such a large discount to the last close? Is there anything else you can add on that?
Yeah, we took that under advice from our brokers, and you know, this was a transaction that needed to close. We needed to make sure it was done. And it's on par with recent transactions. around. So it was the price basically set by our advisors to guarantee that this was going to work. The fact that we're doing it as a rights issue, the current shareholders can participate in that as well. So the effect is not as bad. We understand the issues. I'm a shareholder as well. The chairman's a shareholder as well. We do understand the issues. But when you look at the benefits from picking up 1.4 million ounces and what that will allow us to do, we thought it was worth the short-term pain. And with a bit of luck, and early trading would suggest that we're sort of holding our own and people are seeing the benefit for it.
Great, thank you, Ron. The next question, why didn't Larvotto wait for the drilling results from Mount Isa or Air, and if they're positive, then commit to a capital raise at a higher share price and less dilution?
I can answer that one very easily.
Would have been a wonderful world, Ben. When we started this process, we actually hadn't even done those programs. So those programs have been occurring while we've been doing this. This has taken a very long period of time, and I think the chairman will nod his head when I say it's arguably one of the hardest things either of us has done when you tie in companies with administration. The fact that we hadn't been trading for 2 years and the implications of that, and just getting things done at the moment. Post-COVID, for some reason, everything seems to take twice as long, and I don't understand why. It got to the point where we really did get down to the last day. And I'm not kidding you when I say it was the last day. So there's been a spectacular amount of work over the last few weeks in particular, with some very late nights and some very early starts. It had to happen when it happened, and we didn't have a lot of choice in that. We started off with a lot of options, but they just decreased as we went along. We still believe that the result is well worth the short-term pain. It really does, by any metric, put us into a different league altogether. The asset certainly has a bad reputation. When you understand why that is, it's not its fault. It's a couple of times now companies have been caught out trying to bring this in production. The thing to remember is that they believed in it and they wanted it to work, but they got caught on other assets, sometimes in other countries. So you need to look through the smoke to see the fire in this. And when you start comparing it to the grade of other similar operations, you can see where the potential is here.
And Mark, anything to add on that?
Oh, no, that's
beautiful. All right, next question. There's a few typos in this one, but I'll give it a go. Has Waratah Group committed to the capital raise, and are they maintaining their shareholding?
I'm not sure whether they're coming into the rights issue. They haven't let us know that. They haven't yet participated. Well, they haven't participated in the placement. It's not really what they do. They came into the company very strongly on lithium. That's what they are. They're a lithium fund. So this is adjacent to what they're doing. They're still a very great supporter of our lithium side, but we're happy to watch. And strictly, their mandate is to invest in lithium projects.
On to the next question. To confirm, does the Hillgrove plant have any chance of getting up and running shortly, or is this for exploration purposes only?
Not in the near term. And we'll talk through some of the issues with that in time. It is operational, but what we'd like to do is confirm some of these higher grade hits. We do need to understand a tails dam. Where the current tails dam is nearly done, so we need to look at putting a new tails dam in. Do we want to rush into doing this? No. We didn't buy this to be in production next week, but we see that once in production, it will provide a lot of cash flow to support the company for many, many, many years in other things that it does, and a spectacular stepping stone as well. but it's not going to be an all-out rush to bring it into production. No. Exploration will be the focus, and rebasing and really understanding what's going on. So when we do push the button on this, we want to know exactly what's there. Having said that, we don't actually have any reserves at the moment, so the focus will be getting the reserves to a position where you can move forward. You don't want to be restarting a mine on resources. You need a little bit more work to do there. So that's our focus. Do the exploration, convert the reserves, make the call.
Sure, and I think you've basically answered the next question, but I'll ask it out of courtesy. Why not commence production as soon as possible to provide cash flow for some of the company's exploration goals? Anything to add in that regard?
Yeah, look, no, and it's a fair call. But again, we don't have reserves. We don't have reserves there. You would be looking at some development costs here. That's a financing type situation, and we've got to talk to those people. You can only have those conversations when you've got a reserve base. You can't do it on a resource base. So we've got to work out what the new costs are for underground mining and operating the plant and tweaking it to current metallurgy and move forward. So it's all about converting into reserves before we can answer that question.
But then, just to add to that, Ben, that at that point, and it won't be that long, we'll be talking to, and I've already started conversations with providers of traditional project finance in terms of banks and funds. And so we'll be looking to put in place funding packages that, quite likely will not require, coming back to equity markets. So that's going to be the focus going forward.
And I suppose adding, Ben, we do have a team with a fair bit of experience on this. We've got a very good team on site that were brought in to do exactly what we're talking about. Our general manager there and geologist, very experienced at this sort of thing. My history is bringing mines back into production, and our chairman is an underground mining engineer. So we've got a lot of technical support within the company, and we're not an exploration company who's thinking about moving into production without the skills base to do it.
Okay, sure. Another production-focused question. What is the estimated cost and timeline to production then? And a two-part question, this one. What is the estimate of the cash position at the 31st December this year?
Well, both of those have not been defined. There's a lot of work to be done before we would be able to give a good answer to those. So we're not, we haven't even got the keys yet from the administrator. So we can't. We have an idea, but we need to do a lot more work yet to give better answers to all of those questions and the cash flow question as well. So we will be working on those going forward as soon as we get the keys.
I mean, one of the things to remember here, Ben, is that this operation has run as an antimony mine for 30 years.
Yeah.
It has run as a gold mine on and off for 100 years. It has actually never run as a gold and antimony mine. And if it's economic as an antimony mine and it's economic as a gold mine, and you put both of those together, by definition, nearly one of them's paying for the other one. So either your gold's free carried or your antimony's free carried. And, we need to optimize that. And there's numerous choices of how you do that. So those studies need to be undertaken.
Sure. And just on the antimony, it is a critical mineral, of course. What do you see as the potential for that part of the operation moving forward?
Luckily, it lifts very easily in the float circuit, so it's a high value product. As I say, today it's probably passing through 20,000 Oz a ton. When New England Antimony were mining this, it was about $5,000 a ton. So there's a very big difference in what's going on there at the moment. It is used in a lot of electronics now that it never was. It's used in solar panels. It's fair to say you're only going to see more of those. And it's got many other uses as well, but listed as a critical mineral. To have the largest deposit in Australia and the 8th largest in the world, again, is a good thing. The forecast, talking to people overseas last week, is that they expect that antimony will start trading around nickel type prices within the next 18 months.
Sure, okay. And just back onto the gold production as well, with record gold prices, how much urgency does that add to get moving to production?
Well, it'd be wonderful to be knocking gold out at 3,120 today. That would work for me. Certainly, we're not going to be pondering this, but we need to get it right. If you don't get it right, we all know what happens. So rushing in is not a good solution.
Sure, and a question about your team. You did touch on the Larvotto team to a degree, but running 3 projects, soon to be hopefully 4. Will Larvotto need to take on more staff and senior staff to add capability and capacity to run all projects?
Yeah, certainly that will happen over time, Ben, no doubt. What we, as I mentioned, we do inherit a team on site who have a lot of site-based skills. They were brought in. They've now been there for over 12 months, so they have a very good understanding of the project. Their job was to do exactly what we want to do, and Red River's plan was not a bad plan. They just got stuck on something else, and to their detriment, which has become a spectacular opportunity for us. How we rejig the team moving forward, certainly this is a big acquisition, and some mods of what we do and how we do it will flow through. But we've all run big programs before, I've run 2,000-man drill programs with multiple helicopters and 20 drill rigs all working at the one time, and 2 operational mines at the same time. So can we handle it? Yeah. We just need to gear up and plan for it. And we're seeing, it's a lot better market. The last couple of years operating in Australia has certainly been the most difficult I've ever seen in the 40 years I've been doing this. Getting good people and getting them out there after COVID has been extreme. We had delays of up to 5 months for drill rigs. A lot of those issues now are changing. So we're seeing a bit of a different world, and it is making life easier. It has been a problem for everybody, but it is getting better.
Okay, thanks, Ron. I think we've got time for one more question. Any issues with the metallurgy? Antimony gold products are notorious for that. And would the goal be to produce a concentrate?
Yes, we certainly do produce a concentrate. We actually produce an antimony gold concentrate. Antimony floats very early on and get a very, very good lift with that. And then that goes into a gold antimony concentrate. So we produce 2, a high antimony low gold and a high gold low antimony concentrate. They go to different places to be treated typically. And about 30% of the gold reports as doré from the high-grade free gold circuit. So we get 30% gold in doré, an antimony gold con, and the recoveries through the plant have been in the 90s. So as good as you can get. And the gold recovery was always quite low because the free gold doesn't float. But Red River put in that circuit, and when they ran their low-grade stockpiles, it worked well.
Okay, thanks, Ron. So we'll finish up the Q&A session there. If anybody does have any further questions, I'm sure the Larvotto team would be happy to answer those. So do reach out if need be. So on that note, thank you to Ron and Mark for presenting today. Do you have any closing remarks?
No, I think that's Ron's given a great summary of the asset, the wonderful opportunity. We're really excited and really looking forward to, as I say, getting the keys and getting stuck in and doing the work. So thanks very much for everyone coming on today. We enjoyed speaking to you. So, and thanks for the questions, and we'll be updating you as soon as possible. Thanks very much.
And
great. Thank you, everybody.
There's lots of information to be coming out. Please keep up with what we're putting out on both LinkedIn and the website. Questions, please feed them in. I always try and get back to wherever I can, shareholders, whenever possible. So please don't hesitate to touch base. But as I say, I do recommend have a look at some of the other company metrics and get a feel for why we think this is such a good thing for the company.
Great. Thanks, Ron. And thank you, everybody, for joining us today. We appreciate it. Have a good day.
Thank you.